Hello everyone and welcome to this morning's Forex webinar. Taking us a couple of minutes to get back into the swing of things. As you know, we're having a little a break. We didn't take a break over the summer. The markets were quite lively then, so we just went away for a few days. Although things are quite lively at the moment anyway, David, aren't they? It doesn't used to be a time when things were much more. Markets ran to a much more regular beat, as it were. You could sort of say, yeah, well, take a couple of weeks off here and quite happily go away. And no, it doesn't seem to be like that at the moment, which I suppose it makes it much, in a way, it makes it better. But trading, as you probably know, it can be very, very tiring. And we do really need to look after ourselves physically and mentally. But before we plunge into what's happening this morning or what has happened overnight, can I just draw your attention to the disclaimer that I know you can see on your screen? Trading, as I said, not only tiring physically, mentally, emotionally, it is also a very risky business. So please, please don't ever think of using money that you cannot afford to lose. So here is David sitting next to me, and we're going to be looking at the Forex markets this morning and the other markets as well through the prism of volume price analysis. It's all explained in these books that are up on Amazon. VPA takes the principles of volume and price action really to anticipate where the market is going next. However, our methodology isn't just based on technical analysis. We also look at the fundamental picture. We also look at related markets. What are they telling us about what is happening to individual currencies and currency pairs? And I suppose to that we should need to add these days the politics. I mean, it's just, you cannot escape it. It's almost as if you like, the fundamental news is been relegated. Would you say it's been relegated? If not, I'm using a football analogy. It is not Premier League anymore. It's champion. I would almost say Vauxhall Conference, as we have here in the not quite, but it's sort of championship, certainly not Premier League any longer. It's just the way things are at the moment. And as a Forex trader, yes, you have the chart. Yes, the chart is telling you what is happening on the different time frames. Yes, using VPA and our indicators can give you, the heads up of what is likely to happen, to be coming up next. You have to have, at the back of your mind, you have to be aware of what is happening. You have to have this, not only this macro picture, but I've said the political picture as well. Oh boy, politics are really kicking off this last quarter of the trading year. All this is actually explained. We've put together a program, a Forex program, where we pull all these strands together, not only just the technical analysis, the VPA, just to explain and give traders a really thorough grounding in what they need to know to make sense of these complex markets. They're not complicated, it's just complex. And in addition, as I said, we've also developed some very specific Forex indicators, which will, the best way to see them is in action, and you'll see them on the charts that David and I have. I've got MT5 this morning. David has, I think he's got Ninja Trader. We're not quite finished with TradeStation yet. And essentially, what they do is they deconstruct the Forex market into the individual currencies. What are how are they performing? How have they performed? What are they doing at the moment? What is likely to be happening next? Then we look at the pairs, the relative strength and weakness. Which are the best performers? Which are the laggards, as it were? But laggards is wrong word to use, because just because a pair is at the bottom, as we see it on the matrix that we've got here, it just happens to have the pound. In fact, the pound is a currency we'll be looking at this morning. It just means that the pound has been selling off, and I think it's been selling off in the live markets. We've got the array, which measures the momentum, the strength of the move, and the currency heat map, which looks at the performance of the currency pairs over multiple time frames. The one indicator I'm going to be looking at in particular this morning is the currency strength. That's where we start. We call it the strength indicator, but actually it's a much more sophisticated indicator. You could almost call it a flow indicator. It picks up the flow of money into the individual currencies, and by that it will also it's also a sentiment indicator for the broader market, because very briefly, if the yen is being bought, then we know it's pretty much, you know, the markets are not happy. It's very much risk off, as it were. So we're going to be having a look at that. Details of all the indicators you can find at quantumtrading.com. You can buy them individually. There are bundles, full packages. We're actually doing new bundles for the indicators. We're putting together, because we have so many now, we're putting together little bundles. So if you consider yourself a trend trader, which are the best indicators for trend trading? If you're a breakout trader, if you like trading reversals, we're just, you know, making them a little bit more specific to trader trading types, as it were. Anyway, all indicators support. You get 24/7 for the indicators for life. All upgrades are included, and it's a 7-day money-back guarantee. MT45, NinjaTrader, TradingView, and TradeStation, which we are still working on at the moment. Here it is, quantumtrading.com, where you can find all those details. And as I said, the forex program is at quantumtradingeducation.com, and it does include the full package of trading indicators. And whatever you buy from us, if you start with one and you want to upgrade and you want to add some more to, you want to move to a different package, whatever you want, we will always credit you with whatever you have spent with us. Right, I'm going to set my charts up or bring them up and see what's been happening to the pound since we started this morning. I'll just pass over to David.
Thank you, darling, and a very warm welcome to you wherever you are in the world. It's a glorious morning here, but we've got rain for the next couple of weeks or so, which we've had while we were away, so good for the garden, but not great for living, but there we go. Hey ho, it's we are in October. Good to have you here. As Anna said, if you have any questions, please just drop them in the chat box. Happy to answer them there for you if there are shorter questions. If they're longer ones, we'll answer them on air for you. So I will pass back to Anna and we will get going. She's on MT5 and I've got NinjaTrader running. So I've got various markets. I've got the commodities. I've got the indices. Been huge volatility on the indices overnight with risk sentiment reversing and reversing again. And we're now in a congestion phase as London gets underway, or is getting underway shortly in 20 minutes or so here. And it's all setting up to kick off once again for another day of political shenanigans, which, as Anna said, have now taken over. We actually laughably call it I mean, we've mentioned it many times before, we call it the fourth dimension now. We have the three dimensions, technical, relational, and fundamental. But politics is increasingly dominating, and you have to be aware of who the major players are, what they're trying to do, and the impact of what it is they say. Unfortunately, some of it comes out of the blue, but a lot of it is now, if you like, hard-coded into the markets. They are, I would say, generally speaking, struggling to deal with all this. And there's a lot of indecision and uncertainty about how to deal with the political ramifications that are reverberating around the world from all the majors. So it's an interesting time. It's certainly changed. And the last, this is I wouldn't say it's a new facet, but it's increasingly dominating market moves. It's something we never used to see maybe 10 years ago, perhaps even 5 years ago. Now it's at the top of the tree and it's almost replaced fundamentals as the #1 driver at the moment. That will probably change over time, but that's certainly the case at the moment. I'm going to pass back to Anna and we'll get going.
And the politics, just a brief roundup of what was happening. Obviously, the tariff talks, the tariff disputes, as it were, with the Chinese. As I said, while we were away, the US have now drawn up increased tariffs on Europe. We were actually, as I said, in Italy at the time, and it was all over the news. Those of you who may not know me, I'm actually of Italian heritage. My parents were Italian. I'm still Italian, so I was following this on the local media, and essentially it is going to cause Italy huge problems. They're a huge food producer and exporter to the US. I mean, people may laugh at it, but pecorino Pecorino cheese, all the Italian cheeses. I think they're worth, is it $4 billion a year, the total food production that goes to the US. So it's a massive, massive market. Now, the instigator for that, you say Trump, did he sort of suddenly wake up one morning and say, yeah, time to put some tariffs onto Europe? I know there was always talk about cars and what have you, but actually this was kind of sanctioned, justified from the WTO. It's kind of retaliation. They were given permission to do this because of subsidies on the Airbus. Now, we don't need to kind of understand the ins and outs of it. We all just need to know they are there. They're hanging there. They come into effect unless some agreement is reached on the 18th of October. So we have that. We've got the ongoing things with China. The markets really got spooked overnight because I think the Chinese have cut the one day they were supposed to be talking today and tomorrow. So traders, the markets, when what we're always trying to make sense of is, first of all, this news that comes out, and as I said, we've got the fundamental news and all this in the background, but what we're seeing in the markets, we're kind of seeing the reaction, and the reaction to the news doesn't always marry up. So we've had there's an explosion of excuse the pun, the issues with Syria and Turkey on the withdrawal of US troops from that area. Now, normally, when you have a war, if you like, in inverted commas, or geopolitical events such as conflicts, you would expect certain reactions from, particularly from gold, from the dollar. They would normally be rising. Maybe oil would go down if it's in an area where it's oil producing. That doesn't always happen, and as traders, not only do we have to know this stuff, understand that yes, it could have an impact, but then we look at our charts and actually take a step back and say, yeah, I can see that's happening, but it's not not reacting in the way that possibly your common sense view would suggest that it should react, because this is not about common sense. Markets are deeply, deeply cynical, and the person who kind of introduced us to this world always used to say, Albert, God bless him, he's still around. He always used to say, when you approach the markets as a trader, you have to put your personality, your personal feelings aside. You have to see it from a very, very cynical perspective. You don't have to be cynical in your personal life. Your personal life has nothing to do, you don't define you don't behave in your personal life, by what you see going on in the markets. But you do have to accept that there is a deep a level of cynicism. So and a horrible geopolitical event like a war somewhere is someone out there will see that as an opportunity. That opportunity is then reflected in the pricing that you see on the charts. It's maybe you find that unpleasant. It's just the way it is. And as traders, we are always looking at the charts, being aware of what's happening in the background, and trading accordingly. It is difficult, as I said. Most of the time you have to have what we call cognitive dissonance in your head. You have to hold two conflicting views simultaneously, and as I said, just simply trade what you see. And it's part of the reason why we developed a lot of these indicators, because the charts are fantastic, volume and price action volume, but it takes time to interpret candlesticks, to look at the volume, because it is a discretionary manual system. And particularly with the CSI, it just gives us that focus, that instant heads up thing. The yen's been bought, what's happening? Fine, let's go and find an opportunity in the yen. But it's also telling us that all is not well perhaps in the broader market. And also coming back after, like we've had this break, we've been aware of what's been going on. Sometimes your brain, it takes a little bit of time to get back into it. So having these indicators, understanding the relationships between the different markets, it's a really quick way in to instantly pick up what is happening in the broader markets, which are obviously reflected in the forex market. Before we just go and have a look at the S&P, David's got it up on NinjaTrader. What's coming up this morning? Well, we've had some news out of Europe. This isn't all the news. This is Forex Factory, which most of us use, but actually if you go into talking markets, which I know some brokers offer as part of their having an account with them, the interesting thing is the export, the German exports, and this is the number which is important. It's down, it's minus 1.8 against an expectation, and it's going down. Germany has deep problems, whether it's in a technical recession, but everything is slowing up. Then of course you've got Brexit as well. The Forex Factory just picked up the trade balance. That's the important thing. Imports are going up, but exports are going down, so it's not good for the German economy, possibly for the euro as well. The news coming up this morning, we've got for the pound, we've got GDP, and we've got manufacturing production, and of course we've got Brexit in the background as well. But S&P, the futures, this is what is happening overnight. I always like to look at the hourly chart because it's just a great way. You don't have to look at a lot of candles, a lot of bars. The Forex market is really three distinct markets in the 24-hour period. You've got the Asia session, we're coming into Europe and London, and then of course you've got New York later. I put up a link a little while ago it was a survey from the BIS, which is the Bank of International Settlements, and basically London has now 43%, is it, David, of all the Forex business? Yeah, and what is that over 6, is it trillion? I think I've got the thing somewhere. Where is it? Here we are. Just to give you here it is. I think it's on Reuters. Here we are. It's 6.6 trillion. This is daily, isn't it? On a day. So it's a good market to be involved in, but as I said, you've got to understand what's going on. Right, S&P 500, this is the overnight, this is Globex. What's happening on the hourly chart? Now, normally the range in Asia on Globex is it doesn't move huge amounts, but you can see here the whipsaws. I don't think I can get rid of this crosshair, but David can show you on the thing. As you can see, it went down dramatically, then came back up, then went down, then went up again. So you have this sort of curious or doji-like candle. Then it went up again, then it sold off, and now it's moving sideways, which is much more typical of this market. But this tells you, just having a look at that group of candles there and looking at the price action tells you that it's been pretty lively overnight, and we only have to look at the individual charts to see the level of volatility that sort of triggered, as it were. A lot of whipsaw, a lot of volatility, lots of trading opportunities. But if you don't know what you're looking at when volatility is triggered, then you're going to be caught out. Right. What I've done with the CSI, I've actually changed the layout slightly. I've got the hourly here because I tend to use the hourly for my shorter term trading. What it does is it's just easier. So if you just hover over here, this was about 2 o'clock in the morning. In fact, I looked at this last night just before I went to bed, and it looked as though the euro was very overextended. And I thought, oh, well, possibly it's going to fall overnight in Asia. In fact, it fell much more than probably you would expect. Now we've come here. What's this time here? We've got 8, which is 6 o'clock. The timestamp on MT4 and 5 I found are usually 2 hours behind the actual time. So this is 6 o'clock, but it tells me what's been moving, the extent of those moves, and as we come to the crossover period, are we now going to get perhaps a little reversal? What is the hourly chart telling us? And then I go down to the faster time frames. I've got the 12-minute chart, I've got the 3-minute, and over here I've actually got the matrix. And what the matrix does, it takes all this data from the individual currencies and ranks, if you like, the pairs. So what are the pairs that have been moving most strongly based on what is happening on the CSI. I've actually got it on the 10-minute here, and you can see here this is the sell-off that we've been seeing in the British pound. The sell-off we can see here on the hourly. We see this is the yellow, and it's coming to a point here on the 12-minute, on the 3-minute, so possibly a reversal, and the reversal has started already on the 3-minute against what? Well, possibly the Swiss, although that's still rising, but it looks like the New Zealand. There's a little potentially a move going on there. So what this indicator tells you, it tells you what the flow of money has been into the individual currencies. How is that represented on the pairs, and also sentiment. What is sentiment? If you look at something like the yen is kind of trying to move further down, that means the market is kind of, well, it's forgotten what's happened overnight. It's going to, you know, try and be more positive, as it were. What is also telling about the lines that we see here on the hourly chart is when they are all in this central zone, if you like, of this indicator, there is movement, but there isn't enough divergence in them. The euro suddenly sort of, you know, looks as though it's been, you know, taken a turn for the better, as it were. But what we really want is we really want them to be perhaps at the extremes or moving more strongly. So that tells us that maybe a lot of the pairs are in congestion. And having looked at some of the charts, in fact, I've got the dollar yen here, you can see it tells me that they're moving sideways, possibly as a result of volatility. The volatility indicator was triggered on this hourly candle, big move down, straight back into the spread of the candle, up, then another volatility candle, shot up, came back down again, and now it's moving sideways. So it gives us also a sense of the type of price action that we can expect on the chart, and knowing the type of price action that you are likely to be seeing on the chart will also tell you, is it going to be a good move, is it going to be a strong move, or is it just going to be really, really, you know, you're going to have to grind out some pips. And particularly if it's the volatility has been triggered, then it's going to, how long, you know, it's going to be in congestion, your levels are going to be there, and maybe you're going to have to be a little bit patient. Now we've got London coming up in 8 minutes time. Obviously the pound is going to be moving, be aware. We've got two very important pieces of fundamental news, plus we've got Brexit in the background, so the pound should be fairly lively this morning. And as we see here with the euro, we had this little tick up on the hour, and we can see here at 7 o'clock, this is on the 12-minute, we started moving higher. Let's bring up the euro. Where did it move against? It's on the 10-minute. It was actually, we've got euro dollar and we've got euro Aussie. So, you know, if you come, because traders come to their terminals, to their computers at different times of the day, it's really important that you have, as you know, a good a picture as possible of what's been happening, what's happening now, and what, more important, what is going to be happening next. Having said that, David and I are very much of the opinion that yes, you can trade this market at any time, anywhere, and you know, on any time frame, but you have to be aware of these three separate sessions, and really you can almost treat this as going to having a regular job, and you have a fixed start time and a fixed end time, and you know, and trade that period, but be aware that the crossovers are times when leading up to them where you're going to get moves, but you're also going to get a lot of fake moves as new traders join the market. So having a look at that, let's see what's happening. The euro looks as though it's still going up. The pound looks as though it's still falling, but as I said, in the hourly, they are still in this sort of bundle in the center, in the central zone of this indicator. So we might get some moves, but probably possibly capped by volatility candles on the slower time frames. Right, have you got anything you want to add to that to David? David's actually got the individual charts. I'm going to pass over to him, and I'm going to see what's what. And I have got some longer term positions on. I've been short the euro for some time. I'm still short the euro, euro Aussie, and euro dollar. So, but they've been on for weeks and likely to stay on for some time to come.
Just going to switch over to Ninja. Bear with us a moment, just while we change screens. Okay. There we go. It should be coming up any minute. Just looking over on Anna's. Yeah, you should be seeing 4 charts. I've basically gone to the. I normally have these running on the daily, but I've cut them down onto the 5 minutes just to, for the purposes of this webinar, just so that we can see what's going on in real time more clearly. Basically, as 5 minute time frame, they're all the same. We've got the yen index at the top, we've got the dollar index top right, we've got euro bottom left, and then we've got the pound over on the bottom right. And basically what we're seeing right now is we're seeing a sell-off in the dollar. This is the dollar index, so we're seeing selling of the dollar. We've seen selling of the British pound, And what that tells you is straight away, if we've got selling of pound and dollar, then the pair to not be looking at is cable right now, because both of them are moving in the same direction. There may be some momentum in that move, but it certainly won't be as dramatic, for example, as if you looked at the euro pound, because here we've got strong buying in the euro and we've got strong selling in the pound at the moment. Or indeed, if you wanted to look at euro dollar, exactly the same principle. Euros being bought, dollars being sold. So you know instinctively, instantly, without even looking at a chart of the pairs, which are likely to be revealing momentum and which are likely to be in sideways price action. And if I flick up this is the yen index, just pull that over a little bit. I've got these on fairly low. Look backs at the moment purely for data. For the yen right now on 5, it's moving sideways. So in terms of yen pairs, unless there's a particularly dramatic move in one of the, let's say the Aussie, for example, or a euro, if you were looking at euro yen, for example, there may well be sufficient buying of the euro to actually drive some momentum into the euro yen pair. But it will not be as dramatic as you will see on the euro dollar, because the dollar is falling as strongly as the euro is rising. And it's just a key point. That's one of the key points, one of the key issues. One of the other things, can I also say, we talk a lot about starting with the currency strength indicator. And in fact, it's a question I think came up in the private chat room we run for the education program. And it's a little bit of a misunderstanding, if you will, that the question was really saying, well, do I start with the CSI and not look at the charts? No, you start with the charts. Obviously, you've always got the charts up somewhere. You're looking at the charts, and then you're going to the indicators to really unpick all that information and try and fathom out where are the best trading opportunities. And in terms of the indicators per se, the starting point, certainly for Forex at any rate, is the CSI, because that disassembles this complex market into the individual building blocks, the individual components of a currency. And that's why it's so powerful, because it then gives you the window on this world as to where to go and dig out all these opportunities. You can see what's going on at the moment. We've still got euro rising here, we've still got dollar falling, and the yen is starting to pick up a little bit of negative sentiment. So we've got some selling of the yen, and that in turn should be reflected in the indices in due course. Just head over onto the, let's go onto the indices, because this is interesting at the moment. Anna highlighted it. This is actually the raw futures contracts. This is the YM top left. This is for the Dow 30. So this is the E-mini future contract in December. This is the NQ. This is for the Nasdaq 100. Over on the right-hand side here, I've got the ES, which is S&P 500. That's on 3-minute at the top there, and down at the bottom here, I've got the daily. These are all doing pretty much the same. I've really pulled these out just to show you two things. First of all, the massive surge in volume here. This is, and the nice thing with Ninja is this is real time. We're just coming up to 8 o'clock London Open, so we've just got a few minutes to run to that. This is overnight our time, so this is 1 o'clock in the morning. Massive surge in volume. Volatility is triggered. What's interesting about this combination is on the first volatility is fairly lightweight volume. So this is like a trap move. Then we get the market makers participating, massive surge in volume. It's an out and out trap move. There's huge selling going in here into weakness, and bang, the market reverses off that. It's what you expect to see purely based on volume price analysis. And in addition to that, you've also got the volatility candle here. The market picks up. We had a repeat here, and this is what we're trading at the moment. This is a classic. If you're a breakout trader, you want to trade a breakaway, this is just a classic move. It's all compressed purely because of the volume that came in here, and also because I've expanded this right out. But if we pull it right the way out, I just wanted to do that just to show you the levels. These levels here are based on price. They're on the accumulation distribution indicator, and very simply, the wider the line, then the stronger is that region of either support or resistance. So it's a visual, very, very clear, simple mechanism for displaying where you've got very strong levels or where you've got less strong levels. Where you have these very thin lines, these have been tested perhaps only once and held. Where you have these very strong lines, these very wide lines, these have been tested repeatedly and held. And where you have clusters of them, as indeed you have here, for example, literally being tested as I'm talking, this is a very strong level. clearly this is either going to hold as a platform of support or it's going to be breached and then become resistance. But you can see how often this has been tested and holding all the time. And in real time, the more that is tested and held, then the stronger that level becomes, the wider it becomes, and the more important in terms of any breakaway from this region. This level here is the yellow line is the volume point of control itself. In other words, that is the heaviest concentration of volume on the histogram, which sits in this level right here. And then as the volume falls away, the importance of that is simply that in terms of these levels, which are based on price, the volume histogram itself is obviously based on volume. It's looking at volume, price, and time. It brings time into the equation. So a longer a market sits in a region, then the greater will be the concentration of volume. And you might say, well, so what? Well, two things. First of all, we have the volume point of control, which is confirming the fact that we are in price agreement, to use market profile terminology. So in other words, there is no bias to one side or the other at the moment, and we just have to wait and be patient. And what we're waiting for is the breakaway from that region. And secondly, as the market breaks away from this region, then these volume areas become ever more significant, because if the market breaks to the downside and gets down to these low volume areas, then you expect it to move through there pretty rapidly. And the same is true to the upside. And as the market moves away, then clearly you'll be looking at other multiple timeframes. You'll be going up to 5, maybe up to 10, maybe up to 15 to look at what is in the way in terms of, or how the volume distribution there has been created around those particular timeframes to help you understand what it's like to happen as the breakaway develops from this particular region. And it's all about levels. You set the levels that you would be comfortable with in terms of a move away from this region. You're very conscious of the fact that we have a volatility trigger here, that the market is still trading within that range. So in terms of a breakaway, are you more interested in these levels to the top and bottom of that particular candle, or are you quite comfortable taking a breakaway once it's moved through away from these levels, these price-based levels? So perhaps you'll be looking at something like 26,300 or maybe up to 310 for a breakaway. And to the downside, you might be comfortable looking for this region here. Once we've got down to that level, you might even consider this level. Personally, I'd be looking at this level down here. Once you get down to 230 maybe, then that might be your comfort level for getting into a trade to the short side, and 26,300, maybe 310 for a trade to the upside. But it's a question of being patient. That's all you have to do. Wait, be patient. Extend that out, because that will then get rid of that big candle over there, which is basically distorting everything, so you get a much clearer picture of what is going on in terms of the volume price relationship. And obviously you're looking at the trend monitor across multiple time frames as well. That's where sentiment is at the moment. In terms of the daily, just hop down onto the daily. In fact, we've got some posts going up in terms of daily analysis here. This was, we obviously had the fall. We've got some buying came in here under this big candle, decent volume under there. And we've got various levels up and down the chart, which will ultimately dictate. And what we've said in the post, they will be going out today. But basically, when you're looking at price action like this, and this applies, really doesn't matter what time frame it applies to. If you're a 1-minute trader and you've got a lot of whipsaw price action, a lot of volatility, for example, then go down to a slower time frame, go down to a 3-minute, 5-minute, try and smooth out that volatility, so that you get a better idea of what is actually going on. Because when you're looking at it in sharp focus in terms of all the volatility in the whipsaw price action, it's very difficult to determine direction if you're a directional trader. So in terms of a daily, you go down to the weekly, perhaps even to the monthly to get a perspective on it, but certainly the weekly at any rate, it'll smooth out all this volatility and give you a much clearer picture. And the same applies, as I say, in terms of whether you're a 1-minute or 3-minute intraday scalping trader. So that's where sentiment is right now in terms of indices. Let's just go over the multiple time frames, see what's going on. What's the time now? It's 4 minutes past 8. So, London has now opened. This is cable. Just go on to the currency strength indicators, see what's going on. Let's go over here. Here we go. Okay, this is on, right, we're on 5-minute here. And this is what I meant with the momentum that's in the moves. We've got heavy selling of the New Zealand dollar. We've got some decent selling of the yen coming in now. We've got decent selling of Aussie. But in terms of cable, which is the dollar here and the pound, they are kind of following one another around at the moment. So there is not going to be a strong trend in that particular pair for the time being. In terms of the euro pound, absolutely strong as anything. We've got very strong buying of the euro, very strong selling of the pound. So if you were looking for an opportunity, and there it is, you might have been looking at this as a cross, almost vertical on the euro, immensely strong buying and very strong selling of the pound. But look at the pound and the dollar here, again, following one another around on 10-minute, and the same is true on 15. And if you're looking at this as a reversal trader, then obviously what you're looking at now in an intraday scalping opportunity is, right, okay, am I going to look at the euro as coming up for a sell because it's very heavily overbought, and equally looking for the pound as a buy because it's heavily oversold? And it all comes down to your time frame, your horizon, what it is you're trying to do. This is the euro. I've isolated out the euro on here. This is on the currency matrix. And what you're looking for here is really, first of all, which pairs are rising most strongly. And as I've already highlighted, you've got the euro pound at the top. There's no great surprise. And just going off at a tangent for a moment, one of the things we are developing, we're working on it on TradeStation at the moment, is, and it will be ported back onto all the other platforms, is really to try and give you an understanding of how far from the extreme is this number here, 28.5, and down at the bottom, minus 22. In other words, in the context of overbought and oversold that you look at in terms of the currency strength indicator, in other words, the individual currencies, we want to look at it in context of the pairs themselves. So in terms of the number 28.5, is that at a potential extreme for the euro pound, and is 20 for euro dollar an extreme as well? So we're just trying to develop an addition to the currency matrix, just to give a benchmark, if you will, a yardstick of what these numbers mean. You will very quickly pick it up as you're trading, using them day in, day out, as to whether this is high, medium, or low. If we go up onto, this is on 10-minute. Again, I've isolated it out. You can see it. This is euro pound still at the top. And the other aspect to it also is that what we're looking for here is universal sentiment for the euro. In other words, is the euro being bought or sold universally? Have we got some pairs which we are trading, perhaps, which are not following the flow of money? And what the market is doing right now universally, to come back to levels and flow, is the market is buying the euro. It doesn't matter why it's buying the euro. You may think it's a crass thing to do. You might think, well, you know, the German economy is all over the floor. You know, the ECB is it doesn't know what it's doing. It's you know, it's gone back into easing again. You've got the problems with Brexit, so that's going to impact Europe as well. So, you know, why is the market buying the euro right now? It doesn't matter why it is. It just is for the time being in this particular time frame, and you just have to follow the flow. It's as simple as that. So if you're trading in a euro pair right now, it's happy days, because everyone's doing the same as you. They're all buying the euro. There's no real standout laggards. There's no standout divergence there. It's pretty straightforward stuff. And that means you're trading with the analogy I've used so many times is, and it is true, of a river. Think of these markets as rivers of sentiment. It's a flow, and at the moment we have a river that's flowing in one direction. We've just driven through the mountains. Fantastic flows come off the mountains. You see these wonderful, clear, big rivers flowing out of the Alps, and that's what it's about. It's the same sort of thing. It's that sort of principle. So everybody is buying the euro right now, and if you're trading euro, you're trading with everyone else. You're not paddling your cue in the opposite direction. If you are, and you find out that you are, that's fine, as long as you understand it. But the problem is most traders just trade a chart in isolation. They have no concept of looking at a matrix. They have no concept of sentiment, of related markets, or indeed anything else. Just head up onto the currency array. I've got this is on 5. I'm not sure I've isolated out those. Sorry, just pull that up there. Get rid of that at the top. There we are. Let's just isolate out the euro again. And what the array does, it gives you a sense of both trend strength and momentum, and also sentiment. But in addition to that, it adds in another component, which is which I alluded to earlier in terms of the matrix, is whether pairs are coming up to overbought or oversold status. And where they're in dark with the brackets around, it means they are moving to that condition possibly, and they will then turn to a brighter blue or brighter red once those conditions are actually achieved. And of course, all of that is based on the chart. This indicator is just helping you to understand where to look, what is going on in terms of trend strength, which have got the strongest trends. We've got euro yen here, which is pretty strong. We've got euro dollar, but bear in mind this is all on 15-minute time horizon. And there's another facet. This again is a question we get asked a lot. You have to accept the fact that whatever time frame you're working in, then the opposite will be happening somewhere else. If you're long a particular pair in a 5-minute time frame, I absolutely guarantee you that somewhere else on an hourly chart or a 4-hour chart, someone else will be short and they will be making money. You are trading as an intraday trader, a pullback or a minor reversal perhaps. That's all it is. Whereas a longer term trader will be trading perhaps a longer term trend and they will be making money in an opposite direction. You have to accept that fact. It's part and parcel. You will never arrive at a condition, or very rarely at a condition, where you have the perfect setup where everything is aligned across all the various time frames. And if you're looking at that scenario across a multiple time frame array, the probability is that you're about to get in, if you're taking a trade in the same direction, the probability is that you're actually trading at a point when the market is about to reverse, because that's the corollary of what you're seeing. You're seeing markets at an extreme, and you are one of the last to join that particular move as a Johnny-come-lately, because you've been a little bit nervous and you've been waiting for perfection. And when you jump into perfection, I can almost guarantee you it will be the point where everything reverses again and you'll be caught on the wrong side of the market. I'm sorry if that sounds harsh, but that's a fact. Just go back onto the multiple time frames again. This is what's going on in terms of cable. I mean, it's there's a little bit of movement, but it's hardly great. This is 20. This is 20 odd pips at the moment. We're up on 1 minute here to see what's going on. Yes, there are opportunities here. Just move that out of the way. The trend monitor is supporting. It depends whether you want to trade this sort of price action, but it's not the strongest. We've got a volatility trigger here, so we're expecting the market to congest at the moment, which is what it's doing. And if we go down onto the daily chart for cable, what is the sentiment for cable right now? It's driven by politics. Yes, we've got news coming up at 9:30, so that will impact. But the Brexit is the one that drives everything here. We had weakness yesterday. We had a market that was trying to rally. It hit this level here, which is not one of the strongest, but it's certainly a level of resistance. Came off. Good volume under there. That is not a strong signal. These are the candles you're looking for if you're looking for shorting. We had a big rally that day. Big wick to the upper body, lots of volume underneath. What is that telling you? It's telling you this market is weak. Stronger resistance overhead and very strong resistance up here at 25.50 odd. Trend monitor is staying bright red for the time being. It looks as though we're probably coming back down to the volume point of control in due course. And if we get a no Brexit deal, then, look out, this market's going to collapse. But it's not going to go back to parity. It'll come back down to these sorts of levels. There'll be a knee-jerk reaction. It'll be a great opportunity for the market makers who will make an absolute ton of money. And then almost certainly the market will think, okay, fine, okay, we've had the no Brexit deal. Well, it's been on the table for so long now. Now we're going to reverse again. And you'll see pound buying coming back into the market once more. Down onto 10-minute, there we go. We've got 2 volatility triggers, ton of volume under that one. So the market makers are in here. And again, this is the London Open, 8 o'clock. It's what we expect to see. As Anna said, it's 6.5 trillion, whatever it is, traced through London. London is not going to move into Europe in terms of operational. It's just going to stay where it is. And, we've now got to be patient and wait for this to clear. If we want to trade to the upside, then you've got to wait for this to clear, this particular candle, because the volatility trigger is telling you 2 things. First of all, the market makers are playing. Secondly, you're going to see at the very least a reversal or certainly some congestion to follow that particular trading signal. Let's just go back over and see what's going on indices. Here where sentiment is. Okay. We haven't moved off there yet. We're still trading around that region. So again, it's patience, patience, patience. There we go. If you're a breakaway trader, it's about patience, nothing else. We've got the pivots, which are just really confirming. They do it in real time. They confirm what is going on. They tell you in real time as the market approaches these regions, okay, we've got a pivot high. So we've got some short-term weakness maybe. Pivot low, okay. Yeah, we've got to pivot to the downside. This is helping confirm our levels. Now we've got pivot high, pivot low, pivot low, pivot high, pivot low, pivot high. We're in congestion. It's telling you that the pivots are confirming it, the levels are confirming it, everything is confirming it. And what we're waiting for now is a breakaway from that particular region. If you're looking at this as a breakaway trader, as an opportunity, but it's all about patience. Let's just pull those out again. Let's just head back onto the indices again, the currency indices. Just go back over here, see what's going on. Just drop that out of the way. Just wait for those to load up. There we go. Okay, that's what we're seeing. We've still got selling on the dollar. A little bit of a rally on the pound, but that looks as though it's coming to an end now. This is the euro. Again, a little bit of weakness coming in here. We've got a big wick to the upper body of that particular candle, and followed by a doji candle. So it's not looking terribly strong. And the yen is really not going anywhere at the moment. It's still, there's still no strong direction, and that is reflecting what is going on in terms of indices. And if you're looking at bond yields, which is the other risk market you need to track, then you'd see exactly the same thing in terms of yields and bond prices. It's all about related markets. You have to understand everything is related. If you look at commodities, let's head over quickly there, just flick up commodities. This is commodities against the, I had that doing something else yesterday, apologies. Let me just go to commodities. Got that there, there we go. Okay, this is what's going on. This is, top line is oil, but I really just wanted to focus on gold. Got this on 10, here we go, let's pull that up. And this is the reaction in gold. You've got markets which are volatile in terms of sentiment. You see the reaction in gold, big move in gold, jumped up to 15 or 20. Now it's come off again because that's all calmed down. So you're seeing the inverse of what's going on elsewhere, and it's in the gold market because gold is a safe haven commodity. It's driven by a lot of factors, not least of all inflation. It's also driven by risk. And it's also, of course, driven by the US dollar. So you've got to factor in all those combination of drivers. But it's an instant heads up in terms of sentiment. When markets are in a febrile state, then you'll see reactions in gold. And if you want to trade gold, that's fine, absolutely. But you have to understand what you're looking at. And that's what's been going on overnight. Let's just go back onto the multiple time frames again. There we go. Pound's coming off a little bit now, and no great surprise. This is on 1 minute. Let's just head up here very quickly. This was the volatility trigger. It's what you're expecting to see. You've got to wait and be patient, and it's just a nice trap move for the insiders all the time. Whenever you get volatility, then you can be assured that it's either a trap move or the market makers are actually participating, and be aware that the market is either going to congest or it's going to reverse off that particular candle. It doesn't always. It didn't here. It carried on through. But you just have to be aware of it. And just if you're in a position, then I've said this so many times, if I'm in a position and the volatility is triggered and I've got some decent profit in there, I'll close out and just wait and be patient. If the market carries on, fine, no big deal, I'll just jump back in again. If it reverses or congests, I don't particularly like sitting through congestion if I'm trading a trend. So, I'm quite happy. I'll just sit there and wait. And if it reverses, fine. I might be trading the other direction, or I might wait for it to pick up the original trend. You can see here the trend monitor. You've got the trend line here. So two indicators in one. What it does, it gives you the trend, the direction of the trend with the trend line overlaying the trend monitor, which is looking at the change in sentiment for that particular trend over a more considered time scale. So it's not going to react instantly. I haven't got the trend dots on here, which will react fast because they will move with the price action. But what the trend monitor does, and you use it in multiple time frames, it gives you that heads up as to changes in the sentiment. And it'll go from the brighter colors to the darker colors. We've got darker blue, now it's gone into darker red. If this is a change into bearish sentiment, then it'll change through to darker red ultimately. On 3, there's no change. You wouldn't expect it. It's too early. Certainly on 5, we haven't got it either. Again, it's too early. But again, using multiple time frames, you've got the volatility trigger. It tells you what is like to happen on different time horizons. So whatever time frame you're trading, go down onto the 10. We've got volatility all over the place at the moment. We've got volatility, and it triggers in real time. You can see it here. This is coming in. You don't have to wait for the close of the candle. The way it works on average true range. It's moving outside the average true range to give you a view on when price action has moved outside the norm, the average, the expected. So where you get these big swings, because volatility is just about compression of time. All that's happened is that instead of this price action here being spread over 2 or 3 or 4 candles, it's been compressed into this one candle. That's all volatility is. It's just a compression of time, no more, no less. So it's just the market makers wanting to get a move on, compress time, move the market dramatically. The indicators trigger when it moves outside the average true range for this particular instrument or whatever particular time frame you're trading, and it gives you an instant heads up as to what to expect next. So we've got volatility here, we've got the reversal into another volatility trigger here. Now we just have to wait and be patient. Is this going to reverse inside here, or is this going to be a full-blown move to the downside? Yep, I'm just going to pass back to Anna there. Sorry, I've been rattling on too long.
While David was talking through his charts, what I've actually done is I've got the setup here for the euro dollar, because euro dollar, if we just go back over to the multiple CSIs again, just very quickly, just have a look. We can see here on the hour, you've got the euro rising, you have the dollar falling, that's the red line. Then I've got it on the 12-minute, we've got the euro still rising really strongly, and the dollar falling, but it's reaching a sort of extension, overextended point on the indicator. Then I've got the 3-minute. We've had this kind of little turnover here. Is this going to be the start of maybe a stronger move in the other time frames? You always get this ripple effect. It will start off in the faster time frame and then move to the slower ones. The moves that you see on the faster time frames here, the 3, maybe the 12, maybe the 10, maybe the 15, sometimes they are sufficient to be able to take a trade if you're very, if you're on these time frames, counter to what you see on maybe your benchmark time frame or the slower time frame. I've only got the hourly up at the moment, so it's you're going with the flow. Or are you going to try and take a trade, maybe a counter to what is happening? It depends on the pairs. Some pairs allow you that luxury because they actually move in, there's enough of a move in the faster time frames. It's what their volatility is what is their typical range, and it varies. It can vary according to the time of day, according to the session. You can check this out on investing.com. If you put investing.com forex volatility, there's every pair there, and you say some pairs can move I don't know, on a 15-minute chart, 30, 40, 50 pips. But that comes with different kinds of risk, as it were, because, if things are moving that much in that wider range, you're also going to get a lot of whipsawing in in faster time frames. So if 15 minutes moving 50 pips on 1 and 2 minutes, that could just be going up, down, whipsawing. They'll get there eventually. So it has all sorts of implications for stops, and also how much, not the pain, it's whether you can cope with the emotions that are churned up when you see a lot of whipsaw price action. But just to move back to the euro, as we can see here, it's moving strongly up on the hour. I've got the euro dollar moving, I've got the dollar moving down here. It is reaching on the 12. It looked as though it's be turning over on the, as I said, the euro. It's kind of flatlining. There is dollar buying, but it's the rotation, if you like. Maybe we should be looking at another pair for the dollar buying rather than on the on the euro, and the dollar Swiss maybe is coming to the fore. But to go back to my setup of charts here, what I've got, and this is to help you with, as I said, with staying in the move, seeing why the move is behaving the way it is in the faster time frame, and we need to look at how this is reflected on the hourly chart. As I said, this is the chart that I use for myself. I tend to stay within the hour and then the faster time frames below. Right, and what's interesting here, this is what's happened at the open. We had the volume point of control, then we had this strong move higher from the euro. It actually broke this this key level, the 1.1, but it was accompanied by a volatility candle. So there's momentum behind that candle. Let's have a look at the volume underneath it quickly. Yeah, a reasonable amount of volume under that, but with volatility, our expectation is that you will see a retreat to within the spread of the candle, which we have, but it looks as though it wants to push higher. But in the meantime, we've had this wick develop to the top of the candle. So this is this is what we're seeing. This is the price action on this time frame. How it's reflected on the faster time frames, we had the similar breakaway from the 12-minute chart. This is this move higher. This is obviously 5 candles broken out from the hourly chart, all on volatility, volatility, volatility. But on each occasion, we had the retreat, then the push higher, the retreat, then the push higher, the retreat. And after 1, 2, 3, 4, poof, it's a run out of puff. And now we have a solid move within the spread of that candle, which we're seeing, as I said, on the CSI as well. On the 3-minute chart, again, volatility, volatility, shooting star at the top of the candle with a lot of volume underneath it. Our expectation is it is going to perhaps pull back and retreat lower. Now, a lot of traders will see that and think, do you know what, the bias that I'm seeing on the slower time frame charts, they're still going to move higher. We've actually used this opportunity to enter. This is entering on a pullback, if you like. How you enter is really pretty much up to you. You've got to feel comfortable with either a breakaway, and this is why we've developed the volume point of control. As I said, this is like fair value. It wasn't going anywhere, as we can see on the 3-minute chart. We're waiting for a firm move in one direction or another, supported with a lot of volume, which we can see here. And at some point, that is going to come to a point where it's going to have a little pullback. Shooting star could be a pullback. A lot of traders are not comfortable moving off a breakaway for various reasons. They say, oh, you're chasing price, as it were. But if you understand the structure of the chart in terms of congestion, trend, volatility, is this a congestion with volatility? Well, no, not until this point here, where we had a few volatility candles triggered, but actually it's a fairly consistent consolidation period. And actually the longer a market stays in consolidation, this is Wyckoff's second law of cause and effect, when you get the breakaway, you do tend to get a more explosive move, which is exactly what we've seen on the 3-minute euro dollar. Now, on top of that, if you want to kind of get away from all the noise that you will get on these faster charts, is you can use a renko. This is not time-based. This is purely based on price action and pip value. In fact, the value of those bricks is 2.13. So the let's just take that down a minute. So one of these bricks will not complete until there has been 2.13 pips moved, gone through the market. And this is a classic example. We had the congestion, then we had the initial break, then we had the pullback, then we had a little bit more congestion, and now we're moving high. And this is this little pullback that we saw on the little shooting star on the 3-minute chart. Now, the advantage of using this with a time-based chart is you get a much cleaner chart. You don't have the noise of the so much of the pullbacks, and your entry using this the renko is basically, I use it with the trend dot here. I use it with the trend monitor. So you want to see it, first of all, you want to see it move out of this congestion. We know it's in congestion because we've got the pivots at the top, pivots at the bottom, and we can see this on the 3-minute chart. So we're waiting for a clean breakout supported with volume. It then breaks away, but what the advantage of it, it absorbs any of those pullbacks. So once you're in, if this stays bright red, this, you don't get any red dots. We have got some gray, which is simply telling us we've got a, perhaps moving into congestion, and it keeps moving higher. This is a little pullback. We've got a pivot up here. I've actually got fractals on here as well, but it doesn't show any signs of wanting to actually reverse at this point. Then we go back to, as I said, to the CSI, as David said. Let's have a look here, what's happening here. And interestingly, on the 3-minute, we saw this, it looked like it's a reversal, now it's moving higher. So it's actually, staying with the bias that we can see on the slower charts. And in fact, the dollar, look, there's a little bit of dollar buying coming in, and now it's moving returning lower again. And if we go up the time frames, let's go with the 12-minute. Yeah, it may be overextended, but you know, markets can stay overextended a lot longer than we can stay solvent. And we go on the hour, and you know, looking at where they are at the moment on this, on the CSI, looks as though, you know, it's got a little bit of, there's still plenty of room to run up to, you know, before it gets overextended once again, both for the euro and for the dollar. And this probably we're going to happen for the rest of this session. Of course, when, you know, when New York is going to come in, totally different set of traders. They may say, no, thanks you very much. We're actually going to sell the euro now and we're going to buy the dollar. So that's how you look at it. The renko will help you stay in. It will help you get in. The multiple time frames, being aware of what the, you know, what happens to price action once the volatility is triggered. It's just, you know, you just expect it, you know what is going to happen. Now the most important question is, where is it heading? You know, it looks lovely, lovely move going higher, moving away, nice breakaway move, and this is where you have to keep moving up the time frames, and this is where the levels come in. And you've got 4-hour chart. Well, we've gone through a very important level here at, as I said, 1.10, a key psychological level. Push through there. Volume is sort of okay at the moment. Let's just leave it like that. What is the next significant level? Well, 10. Let's have a look on the 1039. So that is the potential. You've got a minor resistance level here at 1024. The support and resistance indicator, the levels that are painted on this chart on MT45, don't work the same way as on Ninja. There, the lines actually thicken. Here you just get, you know, you get one thickness, as it were, but it tells you that it is a stronger level than this level here. We have another indicator, a Camarilla level, based on the Camarilla protocol, and that's, but I haven't got it on the chart today. Maybe I will do it next time. But at least I have a view of where potentially this move could, you know, could continue. And looking at the hourly, as I said, CSI, you know, this isn't up here. If this were up here and this were down there, you think maybe there's more likely to be a reversal, but there's a lot of clear water for where the price is at the moment and where it is potentially, has a potential to achieve. Is that okay? Anything else you want to add to that? No, is that it? That's it. Fine. Lovely. Thank you so much for coming along. As I said, it's great to be back. A bit rusty to start with, but as I said, once you, if you know what to look for, and you're away for a little while, you do need to, you have to take a break from this business. It is really, really, it can be very draining. Mentally and physically, so you need a break. You need to take you know, some time out to look after yourself. But when you come back, you have to have a quick way of, you know, getting back in what is happening, and we do that looking at other markets. We have our indicators to tell us what's been going on, what is happening now, and more importantly with VPA, what is likely to be happening next. We are back later at 3:15. Yes, it's our time. Yes. Yes. If you've got any questions on anything we've said, or the you know, you want more information, you can drop me a line, Anna at Anna Cooling, or David at quantumtrading.com. Enjoy the rest of the trading day. Between now and Christmas, you know, if you haven't had a rest, take a couple of days off, because it's going to get more intense between now and Christmas. This time of the year always is, but I think given what's going on in the background, it's going to get even more intensive, even more trading opportunities. So we'll catch you again next time if you're not coming this afternoon, or we'll see you here this afternoon at 3:15. Take care.